Welcome everybody, and today we'll discuss about taxation of gift. Yes, this is very important topic from income from other sources chapter. And in this lecture we'll not only understand how gift is taxed under other sources, but also we will understand the implications in the chapter capital gains because of this gift taxation. So there are many things actually little tough to understand, but I will make it easy for you. So listen carefully. Let's start. Hey, first thing, if your employer gives you gift, that means employer gave the gift to the employee, then what will happen? Then two questions. Is it a cash gift? If yes, fully taxable. If it is a gift of movable property, then up to 5,000 exempt, more than that taxable. We discussed in salary chapter, yes or no? Very good. So if suppose you get 20,000 worth washing machine as gift from employer, then 5,000 is exempt, but the balance 15,000 will be taxable. That means 20 minus 5, 15 will be taxable. Okay, this is all about employer giving gift to employee. It is taxable. Okay, now we'll discuss about that if you are doing business and in the course of business you got certain gift. Suppose what happens in the course of business you got certain gift, like from your supplier you got gift, your customer gave some gift, right? Because your skill, you are so happy that somebody gave gift because of the business connection, because of the professional connection, then it is taxable under section 28, that is charging section of PGBP chapter. Okay, so under PGBP it is taxable. Under profits and gains of business or profession it is taxable. But if a gift is given but not taxed under salary chapter, not taxed under PGEP chapter, then where it should be taxed? The answer is quite simple. It is taxable under income from other sources. So if it is not taxed under salary or PGEP, then gift will be taxed under income from other sources. Now which type of gifts can be given? Either cash gift can be given, or gift of movable property can be given, or gift of immovable property can be given, right? These are the three gifts which can be given: cash, movable, immovable. Let's start understanding about cash gift. Suppose you got cash gift. Now cash gift has so much meaning. In special note you can see the first point. What is cash gift? Cash gift doesn't mean that I am giving you 2000 rupees notes or 500 rupees notes and that is cash gift, nothing else. No, sorry. If I am giving a demand draft to you, if I am giving a check to you, if I am giving some traveler's check to you, or I am paying through electronic mode, through UPI, Paytm Karo. So any mode I am making payment to you, right? It is payment. It is transferring money, whether in cash or in digital format. All that is considered as cash gift. Okay, so special note, first point I covered. Now come to the chart. See cash gift. What they said: if your cash gift received throughout the year, cash gift received throughout the year from all the persons, right? What I said, throughout the year, that is financial year, from all the persons together, in aggregate we use the word, is more than 50,000 rupees, then entire amount is taxable. I'll tell you how it happens. Suppose all my students were so happy they gave me cash gifts. Hey, fees is different, gift is different, okay? So they gave me gifts. So altogether it came to 49,999 rupees. Then one student came and said, sir, 1 rupee gift, 50,000 rupees. Till that time I was so happy, no tension. But one more notorious student came. He said, sir, 1 rupee gift to you. Now my total gifts came to 50,000 1 rupee. Now what happened is entire 50,000 1 rupee become taxable. So if it is up to 50,000, nothing is taxable. If 50,000 1 rupee, then entire amount is taxable. If it is 60,000 cash gift, entire 60,000 taxable. If it is 1 lakh cash gift, entire 1 lakh is taxable. If it is 1 crore cash gift, entire 1 crore is taxable. So you should be clear what I am saying. Okay. So chalo, let's understand. Cash gifts, what they said, throughout the year, from all the people together, exceeds 50,000 rupees, then entire amount is taxable. Clear? Now, cash gift, no other doubt should be there. No other thing you have to remember. That's it. Now come to movable property. What is movable property? Movable property may be jewelry, archaeological collections, painting, drawing, sculptures, work of art, bullion, jewelry, even virtual digital asset is movable property. We'll discuss later on, don't worry. But just I am telling you, these are all movable property. And the list I'll tell you later on, only that 10 items are properties, right? In that, one is land and building, immovable, and all others 9 are movable property. Suppose example, I am giving you something like a t-shirt as gift. Is it taxable under the other sources chapter? No. Only that 9 movable properties like jewelry, archaeological collections, painting, drawing, sculpture, work of art, these list which I will be telling later on will be taxed if you get it as gift. Other movable properties, suppose I am so happy with you, I gave you, there is one Sony's Bluetooth speaker. The size is this much, very big size, right? Outside in jungle you want to do party, you can go with that speaker and really great party you can enjoy. Something around 1,80,000 rupees. Sony Bluetooth speaker I gave. Very big size. No tax. Why? Not covered under the movable property definition. But suppose if it is covered under the definition, then what will happen? Then is it given for free? The question is. That means, is it given without consideration? Then the question is, if it is given without consideration, then what is its fair market value? Check. If fair market value is less than 50,000 rupees, then no problem, nothing taxable. If fair market value is more than 50,000, then entire amount is taxable. Okay. Now, here when we talk about movable property, it is not just from your one friend or two friend will check. All the movable gifts throughout the year aggregated is more than 50,000, then entire amount is taxable. If throughout the year from all the people aggregated and less than 50,000, no problem, not taxable at all. Clear? Very good. Now this I spoke about only movable property without consideration. So what is the parameter? Fair market value. How much it should exceed? 50,000 rupees. Is it a single gift more than 50,000 required? Fair market value of single movable property gift should be more than 50,000? No. Aggregate all movable property gifts together in a year should be more than 50,000. Then entire amount is taxable. Less than 50,000, nothing taxable. Okay. But suppose sometime movable property is sold for less consideration. Suppose example, I went to my friend's jewelry shop. He said that Ganeshji, this jewelry is worth 1,50,000 rupees. But I know you so well, I am very thankful to you. and I'll give this 1,50,000 worth jewelry for 50,000 to you. Now, what is the fair market value? As he said, 1,50,000. What is the actual consideration or inadequate consideration? 50,000 rupees. Now 1,50,000 you compare with 50,000. Tell me what happened. Sir, difference is 1 lakh. So whenever it is inadequate consideration, we should check the difference between the fair market value and the actual consideration, that is inadequate consideration. If the difference is more than 50,000 rupees, if the difference is more than 50,000 rupees, then entire difference will be taxable. That means here 1,50,000 minus 50,000, so entire 1 lakh will be taxable. Keep in mind. Okay. And now we should check how many cases of inadequate considerations are. All such cases will find the differences, right? Fair market value minus that consideration, fair market value minus that consideration, fair market value minus that consideration. Now the difference will come, right? All that will be aggregated. If it is more than 50, then that entire difference amount is taxable. Less than 50, nothing taxable. Are you clear about movable property? Are you clear? Very good. We'll practice problems, right? Whatever I taught, I will check how much you are clear when we solve the problems. Okay? I'll ask questions and you tell the answers. Very good. Now, we have to discuss about immovable property also, correct? The point is, when I talk about special note 2, you see, cash and movable property. We'll check aggregate of the gifts throughout the year. Whereas for immovable, only single gift should be checked for this 50,000 rupees. So for cash, for movable, aggregate is checked, and only for immovable, only single asset gift is checked. Single immovable property will be checked for 50,000 limit. Now for cash, there is separate 50,000. All cash gifts together, separate 50,000. All immovable properties aggregated together, separate 50,000. Okay, but immovable property, each item there is separate 50,000. Okay, this is what the difference between cash movable versus immovable. Special note 2 over. Okay, now come to immovable property. If immovable property is given for free, immovable property is given for free, totally free, then we'll simply check the stamp duty value. We'll simply check what? Stamp duty value. And if stamp duty value, that is fixed by municipal authorities, so we'll check that stamp duty value. And if stamp duty value is more than 50,000 rupees, if stamp duty value is more than 50,000 rupees, then entire stamp duty value will be taxable. If stamp duty value is less than 50,000, then nothing is taxable. Are you able to understand? Hey, I am talking about immovable property. That means land and building. And I am talking that it is given totally for free, total gift, right? In that case, we'll don't have any consideration, correct? So we'll only check the stamp duty value. If stamp duty value is more than 50,000, entire stamp duty value taxable. Less than 50,000, nothing taxable. Okay, clear? Very good. Now I got two lands as gift from my friends. One land is worth 30,000, second land is also worth 40,000. Tell me, will I be taxed under other sources for receiving gift? The answer is no, because this is immovable property. Separately, first 30,000 worth land, oh, less than 50, not taxable, cross. right? Second, 40,000 worth land, less than 50, so cross, not taxable, right? For immovable, each transaction is separately checked. Okay, that's why this is 30, that is 40, and each individually is less than 50, so not taxed. Now, if same would have been in movable, 30 plus 40, 70, more than 50, so entire 70 would have been taxed if it is cash, if it is movable. But if it is, because it is immovable, each transaction we check less than 50, so not taxed, not taxed, that's it. So I only spoke about without consideration till now. Suppose immovable property you got for inadequate consideration. Immovable property you got for inadequate consideration. Suppose 10 lakhs worth land you got for 3 lakhs rupees. Then we will see the difference. The difference is 10 lakhs, 3 lakhs, right? 10 lakhs worth stamp duty value asset you got for 3 lakhs consideration. So 7 lakhs is the difference. Correct? 7 lakhs is the difference. And this 7 lakhs is more than 50,000. So entire 7 lakhs is taxable. Entire 7 lakhs is taxable. Entire 7 lakhs is taxable. Suppose example, I'll tell you that you got certain immovable property without consideration and sale consideration plus 10%. Sale consideration plus 10%. Okay, like sale consideration here was 3 lakhs plus 10% how much? 30,000. So 3 lakhs 30,000. If suppose stamp duty value would have been between 3 lakhs and 3 lakh 30, then nothing would have been taxable. Okay, even though the stamp duty value is more. So what is important? Two things are very important. The difference between stamp duty value and consideration should be more than 50,000 rupees. This is compulsory. And sale consideration plus 10% should be less than stamp duty value. That means stamp duty value should be more than, should be greater than, stamp duty value should be greater than 110% of sale consideration. If these two are okay, if both conditions are satisfied, not single, this is not either or, this is and, okay, if both are satisfied, the difference is more than 50,000, and second one, the sale consideration plus 10%, right, compared with stamp duty value, still stamp duty value is more. In this case, then the difference between stamp duty value minus sale consideration will be taxable. Stamp duty value minus consideration will be taxable as gift under other sources. Clear to all of you? Very good. Now I'll ask you one question. Suppose I gave 1 lakh worth jewelry as gift to you. Okay, for you it is taxable, no doubt about it, because jewelry what I gave is more than 50,000. I gave 1 lakh worth jewelry, so entire 1 lakh is taxable to you under income from other sources. Correct? Very good. Now jewelry is a capital asset. Agreed? Very good. When I am gifting you, it is transfer, yes or no? Gift is a transfer or not? It's a transfer. So should I be taxed under capital gains? The answer is no, not at all. Even though jewelry is a capital asset, even though it is transferred, when I am giving gift, it is transfer. Still, under section 47, gifting is specifically exempt. If I am giving gift without a single rupee consideration, I am giving it to you. Okay, then the gift is fully exempt. The giver will not be taxed. The receiver will be taxed for sure. The giver, there is no capital gain. The receiver, there will be other sources if condition satisfied. Are you able to connect? Again I am repeating to you, if I gave 1 lakh rupees worth jewelry to you as gift, because it is more than 50,000 rupees, you will be taxed under other sources gift taxation. Okay, but because it is a capital asset, it is transferred, so should I be taxed under capital gain? The answer is no, because under section 47 the giver of gift is fully exempt. Okay, no taxation. But suppose I gave 1 lakh worth jewelry to you for 20,000 rupees. 1 lakh worth jewelry I gave for 20,000 rupees to you. Then definitely capital gain should be computed. देखो 1 lakh worth jewelry I gave to you for 20,000. You check the difference. 1 lakh 20,000. Okay, only 80,000 difference. And 80,000 is more than 50,000. So for you on 80,000 taxed as gift under other sources. For me the sale consideration is 20,000 rupees minus the transfer expenses minus the cost or indexed cost, whatever capital gains or loss comes will be computed. So in case of inadequate consideration, the giver of gift will be taxed under capital gains, right? So this you should remember. If I am giving 100% for free as per point number 3 to you, then no capital gains on me. Other sources, if conditions satisfied, you will be taxed. Suppose I am giving immovable property as gift, or maybe for inadequate consideration, and that consideration is not right. Stamp duty value is very high, and the income tax department is ready to tax me. I said, sorry boss, stamp duty value is too much. I request you to please refer it to valuation officer. And if I request that it should be referred to valuation officer, then definitely the assessing officer will go to the valuation officer for value determination. Okay, that can be done, and we discussed it in detail in the capital gains chapter. 50C we discussed it, right? Array 50C we discussed or not? Then we discussed that 54H, 55A, there we discussed, right? So done. Now come to the next story. We have to understand that what will happen to the giver. How will he be taxed? Suppose I am giving a gift to you, what would be the tax implications in my hand? And you as a receiver, what would be the tax implications in your hand? Both should be clear. So I am going to discuss with you that part now. Are you ready? Very good. Now when it comes to cash, if I am giving cash gift to you, so no tension at all. Giver, forget about him. No tax at all. If I am giving cash gift to you, no tax on me. To you, we'll see. If it is more than 50,000 aggregate gifts during the year, more than 50 for you, then taxable to you. But for me, cash gift as a giver, no taxable, no capital gain. Okay. But if it is movable property, if it is immovable property, then the question comes, am I giving 100% for free? Am I giving for no consideration? If the answer is yes, then under section 47, the giver of gift will be fully exempt and capital gain will not be levied. But suppose if I am giving for inadequate consideration, then on me the capital gain will be computed, right? For me, capital gain will be computed. Suppose I am giving movable property for inadequate consideration to you. So what will happen to you already discussed under other sources chapter. But what about capital gains to the giver? Because inadequate consideration, some consideration is there, right? So for movable property, it is very easy. Whatever sale consideration is there, that I'll take as sale consideration. Transfer expenses will be deducted, net sale consideration arrived at. Then should we take cost of acquisition? Dekho, I am giving you a gift, that means I may have purchased it in the past, right? So whatever cost to me, that will be reduced. If the asset is long-term capital asset, then I'll deduct indexed cost of acquisition. If it is short-term, only the cost of acquisition. And the capital gain is computed. This is it for movable property. Simply take sale consideration minus transfer expenses, net sale consideration, cost of acquisition or indexed cost based on the situation, decide the capital gain. But what about immovable property? Here the consideration is already inadequate and comparison is always with stamp duty value, correct? So stamp duty value or the inadequate consideration, whichever is higher will be taxable. Okay, will be taken as sale consideration. Sale consideration is also called as full value of consideration in our books, in income tax language also. Okay, very good. Now sale consideration is either stamp duty value or sale consideration, whichever is higher. Transfer expenses actual will take, net sale consideration will get, cost of acquisition or indexed cost of acquisition as the case may be, and I'll calculate capital gain. That's it. Very easy in case of the giver. No confusion at all. All the confusion starts when we think about receiver. Capital gains in case of receiver. Okay. Now, what they said, when the receiver received the gift, is it taxable to him under other sources? If it is taxed under other sources to the receiver, then there will be a different treatment. If it is not taxed under other sources to the receiver, then the treatment is different. Okay, this point you should be able to recollect. So receiver of gift, is it taxed under other sources more than 50,000, right? If yes, then the treatment is different. Not taxed under other sources, treatment is different. Okay, suppose if it is taxed under other sources, then what will you do? Very logical thinking you have to apply to solve the problem. Okay, wait, I'll tell you one more thing. Dekho, if it is taxed under other sources, suppose you are the receiver, suppose your name I'll take as samjho Shyam. You are Shyam and I gave you gift. That gift was taxed under income from other sources to you. Clear? Now the situation is clear to you. Now you sold that outside. So now, if it is movable property, then whatever sale consideration you got, that is your sale consideration minus transfer expenses actual, net sale consideration you can easily arrive at. Then what should be the cost? Here is the big question. The cost will be, because it is movable property and it was taxed under other sources. Movable property taxed under other sources. So simply you will take fair market value. Right? You will take cost as fair market value. Should you do indexation or not? Right? To decide that, we have to see the period of holding. If the asset is held for more than the specified period, it is long-term capital asset. Less than specified period by you, short term capital asset. Hey, wait. Yes, by you only we'll check. Okay. Now the next question comes, indexation. The day when you hold a period that you should consider. So index for the year of sale divided by index for the year in which you got the asset. Okay. Cost also fair market to value to you. Period of holding also your period of holding will be counted, right? Because you are taxed. And finally indexation from your part only. This is movable, nothing complicated. What about, hey, still if you feel doubt, no worries, because there are huge number of problems which we are going to do, right? Around I have 8 plus 5, 13 problems, 15 problems on this topic just for you to practice. I'll do with you, okay? So you will never feel that you are in a dilemma. 100% clarity. Okay, chalo. What I said. Hey, I am talking about receiver. You are the receiver. Shyam is the receiver. Right? Receiver. Did you pay tax under other sources? Was the gift taxable under other sources? Yes. Then later on you sold the asset. So capital gain will arise. Right? When you got the gift, you were taxed under other sources. When you sold it, you are taxed under capital gain. So when you calculate capital gain, simply take the actual sale consideration. In case of movable property I am talking about, net sale consideration you will simply get by deducting transfer expenses, which is actual, and you have to decide whether it is long term or short term. Based on your period of holding will decide whether it is long term or short term. And second thing which I have to tell, indexation. Index for the year of sale divided by index for the year from which you are holding the asset. Okay, this is what you should remember. This is about movable, right? And this is about movable. What about if under other sources you are not at all paying any tax? Then you sold the asset. So obviously capital gain, your sale consideration is sale consideration, actual. Transfer expenses actual. Net sale consideration you will get after deducting transfer expenses from sale consideration. Cost. Now what should be the cost taken? You got for free, right? So cost should be 0. But no, here the cost will be cost to the previous owner under section 49 subsection 1. Under section 49 subsection 1. So because you paid 0 money, you took 100% as gift, then cost will be cost to the previous owner. Even the period of holding of previous owner is counted to decide whether it is long term capital asset or short term capital asset. Indexation will not change. Index for the year of sale divided by index for the year in which you took the asset. Okay, this way you should understand in case of movable property. Any doubt? When we practice, you will get more clarity. Okay, correct? Very good. Suppose example, you purchased it for inadequate consideration. One more case I'll tell you. But you are not taxed under other sources. Then the cost will be whatever you paid. Right? That you have to take as cost. Why to worry? Nothing. Chalo. Now, let's come to the next story. The next story talks about immovable property. The whole line I will cover at a time. Immovable property. What it says. Hey, are you taxed under other sources? If yes, then what will happen? You are now selling the asset again. Hey, when you received immovable property, land, building as gift, you were already taxed under other sources. Now you are selling the same building, land again. So sale consideration is quite common. No extra thinking should be applied. Simply take your actual sale consideration or stamp duty value, whichever is higher. stamp duty value or sale consideration, whichever is higher. Transfer expenses, if given, actually deducted. You will get net sale consideration. From that you have to deduct cost, right? Now what should be the cost? Because you paid tax under other sources, the stamp duty value will be your cost. The stamp duty value will be your cost. Okay, very good. Suppose you did not pay tax under other sources, then no tax under other sources. Then cost to the previous owner would have been your cost. Cost to the previous owner would have been your cost. That's it. Clear? So cost changes. If you pay tax under other sources, stamp duty value is your cost. If you did not pay tax under other sources, then what? Your cost to the previous owner will be your cost. Suppose there may be one more case where you paid inadequate consideration but was not taxed under other sources. Then whatever you actually paid will become your cost. Okay, very good. Now I'll ask you a question. What should be the period of holding? If you are taxed under other sources, the day when you got the asset as gift, from that day till sale you will check the period of holding. But if you are not taxed under other sources or you did not pay any consideration, then even previous owner's period will be counted, right? So previous owner's period will be counted only in one case, when the receiver of gift not taxed under other sources, right, not taxed, then only previous owner's period will be considered. And second compulsory condition is no consideration paid by the receiver. So receiver got it for free and not paid other sources tax also, then previous owner's period of holding counted, otherwise no. Then indexation, index for the year of sale divided by index for the year of you taking the asset, right? Index will not change in any case, it will be same. Index will never be for the previous owner. Okay, to decide whether the asset is long term or short term, previous owner's period is considered sometimes, right? When receiver is not taxed under other sources, receiver did not pay any single rupee consideration, then previous owner's period will be considered to decide whether the asset is long term or short term. To decide the period of holding, it will be checked. Otherwise the receiver of gifts period of holding only is checked. But indexation, in all cases, yatra tatra sarvatra, simply index for the year of sale divided by index for the year of receipt of gift. Chalo, I'll made more easy for you. Okay, this way you apply all the logic, no problems you will be confused. But what happens if you get such problems? Little complicated, so read the question 3-4 times before solving so that you will not do mistakes. Okay, now capital gain concept is clear, but what is property? There are 10 items covered under the property definition. What are they? Randomly I'll tell, 10 you have to remember. Jewelry, painting, archaeological collections, work of art, drawing, right, sculptures, 6 over, bullion, share securities, 8 over, immovable property and virtual digital asset. This is the first time addition. Okay, first time addition. Virtual digital asset is also property. So what is it? Jewelry, painting, archaeological collections, work of art, drawings and sculptures. 6. Bullion, shares and securities. Virtual digital asset, immovable property like land and building. This is the property. Only for these items taxation of gift concept applies. Oh sorry, only for these 10 items taxation of gift concept applies in movable and immovable property. Catch छोड़ दो यार, ठीक है? Right? Very good. So 9 are movable items as I said, and 1 immovable property. That also we discussed. Suppose example, I gave shirt, I gave watch, gave Bluetooth speakers, I gave laptop, I gave mobile phone, I gave tablet, I gave like furniture, I gave bed. Array, no taxation under income from other sources as gift, because it is not falling under the property definition. Okay, if I gave jewelry, then yes, falling under this definition, it will be taxed. Very good. Now shall I go to the next topic? Are you all okay? Very good. Now, so I already said to you, if it is other than these 10, such movable or immovable will not be taxable. Okay. Now come to the important thing which we have to discuss. Hum dil cart HUF ADD. Hum dil cart HUF ADD. What is this list? Till now, whatever we discussed under this part, this section hum dil cart HUF ADD overrides. That means even if gift is more than 50,000 rupees, still not taxable if it is given by any of these list people. Okay, so whatever rules we discussed till now doesn't apply to this hum dil cart HUF ADD. So if it is hum dil cart HUF ADD SSC, then no gift taxation. Clear? Other than hum dil cart HUF ADD, gift taxation applies. Okay. So what is H? H for hospital or medical institution. H for hospital or medical institution. U for university educational institution. M for marriage. On the day of your marriage, you take any gift. Arey, on the day of your marriage, I said, your chicha pupa's marriage nahi re baba. हाँ, your mama's marriage nahi बोल रहा हूँ मैं. Right? H for hospital or medical institution. U for university or educational institution. M for your marriage, not anybody's marriage. Okay? किसी और की शादी में मैं gift लूँगा ना. It is taxable. In your marriage, if you take gifts, not taxable. That's why rich people are so smart. On the day of marriage, they gift a huge, many gifts they give on the day of marriage. You see Isha Ambani's marriage or any rich person's marriage, they get lot of gifts because not taxable. Okay, on the day of marriage. हाँ, आप लोगों के सपने मेरे को समझ में आ गए. I understood. अब सब्जेक्ट में आ जाओ. राइट, कम बैक टू द सब्जेक्ट. शादी के बारे में बाद में सोचना. सो H फॉर हॉस्पिटल और मेडिकल इंस्टीट्यूशन, U फॉर यूनिवर्सिटी और एजुकेशनल इंस्टीट्यूशन, M फॉर मैरिज, D फॉर डेथ इन केस ऑफ डेथ if any assets are transferred, right? I for inheritance, father transferring to children the property. Inheritance or will, we can use the word. Okay, so DI, death, inheritance. L, local authority. You got gift from local authority. Arey wah, local authority gave gold chain as gift to you. Sometimes they can give, right? Nothing wrong in it. Because you maintained the clean, right? Your house is the most clean house and municipality want to award such people. So they gave you a gold chain as gift. Then not taxable. हाँ, gold chain is worth 10 lakhs rupees. Still not taxable. Okay? भगवान करे आपको म्यूनसिपालिटी से गिफ्ट मिले, अच्छा रहता, बहुत अच्छा है. तो एनी गिफ्ट फ्रॉम म्यूनसिपालिटी, गवर्नमेंट, एनी गवर्नमेंट, आई एम रेडी टू टेक, नो प्रॉब्लम, बट आई शुड बी वर्दी एनफ टू टेक इट, देन आई विल टेक. सो हम दिल ओवर. H for hospital or medical institution, U for university or educational institution, M for marriage, D for death, I for inheritance or will, L for local authority, CART, CA, charitable association. Hey, charitable associations can be registered or required to be registered under section 12AA of the Income Tax Act. So if they are registered under 12AA of the Income Tax Act, they give any gift to you, then it is fully exempt. Okay. Or you receive gift from your relative. Now who is relative? Just beneath this only I said, so I will cover it now itself. Suppose you are there, योर स्पाउस इज देयर, एक खड़ूस आदमी का एग्जाम्पल देके बताता हूँ, ठीक है। क्या है यार, नाम भी लेना दिल नहीं बोल रहा, आई लीव इट, ठीक है। चलो, आई टेक द एग्जाम्पल that suppose Jethalal is there, very nice person, right? You would have seen that Jethalal's wife Daya. So for Jethalal's wife Daya is a relative. For Jethalal, his son Tipu, his children are relatives. For Jethalal, his brother is relative. For Jethalal, his sister is relative. For Jethalal, his brother's wife, sister's husband are relative. For Jethalal, his wife is relative, right? For Jethalal, his mom and dad are relatives, right? For Jethalal, his mom's sister brother, dad's sister brother, their spouse are relatives. For Jethalal, Daya, that means his wife's parents, mother and father are relatives. Okay. For Jethalal, his wife's brother Sala, his wife's sister Sali is also relative. This way you have to remember the entire topic. Okay. So somebody the whole country can connect with, right? That's why I thought I'll take this example. So relative clear? हम दिल काट, तो CAR तक हो गया ना. रिलेटिव मीनिंग इजी है ना? अरे वेरी इजी यार. सिंपली यू रिमेंबर you, your brother, sister, their wife and husband, simple. Your mother, father and their brother and sister, their wives and husbands, हो गया ये एक दो जनरेशन. उसके बाजू वाला cousins, okay, covered. Then your wife and your maternal uncle aunt, covered, right? Your wife and your wife's brother, sister, their spouses, khatam. Your children, covered under the definition of relative. Okay, sir, children यहाँ नहीं दिया. अरे, if definition doesn't cover children, children are relatives, right? And you can inherit something to them, you can give something to them in the name of will, so that way they are anyhow covered. So HUM, hum, DIL, dil, CAR, T for trust. Hey, if a private trust is created, what I said, if a private trust is created for the benefit of the family members, then any gift given to that private trust is also not taxable. Given by that private trust is also not taxable. To you, if it is given, not taxable. HUF, so Hindu undivided family giving gift to any of its relatives, not taxable at all. Or relatives giving to HUF, or the family members of HUF giving gift to the members, or HUF, not taxable. ADD, in case of amalgamation of two companies, in case of demerger, one company becoming two, if any gifts are given, not taxable. Any assets are exchanged, not taxable. Okay, very good. Finally, if there is a disastrous situation, there any gifts are given, gift means some aid is given in simple language, right? By central government, state government, local authority. What I said, central government, state government, local authority. It is not at all taxable. Who gave the aid? Central, state government, local authority. Gave the aid in case of disaster. Not taxable at all. Right? Chalo, I'll tell you. If hum dil cart HUF ADD is there, then gift taxation provisions will not apply. That means gifts are fully free, not taxable. Okay, H for hospital or medical institution, U for university or educational institution, M for marriage, D for death, I for inheritance or will, L for local authority, right? CART, charitable association or institution, you can use any word. R for relatives, which we discussed just now. T for trust, that is private trust basically. Then HUF, Hindu undivided family giving gifts to its members or members giving to HUF. Right, we discussed this. All the family members of HUF are treated as relative to HUF. That also you should remember. HUF. Then ADD, A for amalgamation, D for demerger, D for disaster. Disaster gift should be given compulsorily by central, state or local authority, that you should remember. With this we understood every provision in relation to taxation of gift. There should be no doubt in your mind.